I will now tell you in simple terms a 52 or what it means to say a 52-week high slash low. The 52-week high slash low is a measure used in trading to track the highest and lowest price at which a stock has traded over the past year. Here's a simple breakdown. Definition: the 52-week high refers to the highest price at which the stock has traded over the past 52 weeks, or 1 year, while the 52-week low refers to the lowest price at which it has traded during the same period. Role in trading: the 52-week high slash low is important for investors and traders as it provides insight into a stock's recent price range and trading activity. It can help investors gauge the stock's volatility, momentum, and potential future movements. For example, a stock reaching a new 52-week high might indicate positive sentiment and potential upward momentum, while hitting a new 52-week low might suggest negative sentiment or challenges facing the company. Example, let's just say company XYZ stock is currently trading $50 per share. If its 52-week high is 60 and its 52-week low is $40, it means that over the past year the stock has traded a high of 60 and low is 40. Investors might use this information to assess whether the current price is closer to the high or low end of its recent trading range and make decisions accordingly. Overall, the 52-week high-low provides valuable information to investors and traders about the stock's recent performance and can help inform their trading decisions. If you find that useful, use it.